What's up, everybody? This is Brian Bobo at Hunt Real Estate right here in beautiful Rochester. If this is your first time to this channel and you want to know everything about working, eating, sleeping, living, playing, and buying a home, then make sure you tap that subscribe button. Click the little bell so you're notified every time I do a new video. Honestly, I get so many people calling who are relocating here, and I absolutely love it. If you're thinking about moving, relocating, or coming here to stay, make sure you give me a call, shoot me a text, send me an email, or even send me the pigeon carrier. However you want to get a hold of me, I've got your back moving to Rochester. Hey everyone, back this week with Lindsey, and Lindsey's going to be talking with us a little about interest rates. So Lindsey, I'll let you take it away.
Sure. Thanks again for having me, Brian.
Absolutely.
And I think obviously this is a big concern for people right now. There's a lot of different things going on in the world that are sort of impacting rates and maybe even making them a little unpredictable right now. So for anybody that purchased in the past couple of years or even took advantage of refinancing, kind of coming out of COVID, interest rates were at an all-time low right around January of 2021. A lot of people were grabbing rates in the mid twos. And that's kind of like rock bottom, the lowest we've ever seen rates.
Okay.
Yeah. And just to put it into perspective for you, we could look at a whole chart and kind of see how they've trended over the years. But in 1981, so they were actually at an all-time high where people were seeing interest rates above 18%. So quite a big difference even from kind of where we are now.
Absolutely, yeah. And that definitely even impacts what people can afford. So glad we're nowhere near those interest rates anymore.
Right.
But, they are year over year higher now, like you said. Not crazy, but, still all-time lows, really.
Yeah, exactly. So we're not quite really to where they were pre-pandemic. Just to give you perspective. So we kind of finished out 2021, around 3.75 or so. So still under 4%. And when within the first 2 weeks of January, they kind of shot right up to around 4%. They've been hanging around there. We've seen a little bit up and down since then. Last week, we saw some people take advantage of under 4%. And I think a lot of that was driven from, what's going on in Ukraine right now.
Sure.
These types of things cause uncertainty in the global market. So investors want to go to safety, right? Mortgage-backed securities are a safe investment for them. So they're kind of transitioning their money there. And this actually leads to rates falling. So that's kind of what we saw in the last 2 weeks. Today they were back up above 4. So we're seeing a little bit of back and forth. Nobody really can predict definitively what they'll do by the end of the year. The original prediction was that they'd reach 4% by the end of 2022. We're already kind of there. So, we may stay level. We may see periods of them dipping down and coming back up. But that was kind of our original prediction. Now things have obviously changed. That could impact that. But that's kind of where we stand today.
Okay. Now, obviously, the interest rates are going to impact people's mortgage payments. So can you talk a little bit about, even just like maybe a 0.5% change, how that is going to change somebody's payment each month?
Yeah, absolutely. So I'll give you kind of just a quick example, but we'll just use a purchase price of $200,000. So buyers purchasing something for $200,000, we'll say they're putting 20% down. At an interest rate of 3.5%, their monthly principal and interest. So again, this is separate from taxes and homeowners insurance and all of that, but just their principal and interest is going to be around $718. If we go up 0.5% there and we say they, take advantage of a 4% interest rate, it's going to raise their monthly principal and interest to $764. So you're about a $46 difference there. Now, obviously that impact kind of goes up as your purchase price goes up, it's going to be more significant. So just to give you another example, let's say that we took our purchase price up to $400,000. They still put 20% down. In comparing 3.5% to 4, your monthly principal and interest is going to go up from $1,437 to $1,528. So you're going to see more of a $91 difference there in your monthly payment.
Okay. So obviously still not bad in the grand scheme of things, but it's kind of almost maybe a little bit of a trade-off. Some people are saying they want to wait to buy just because of the way the market is, but we don't necessarily, with the uncertainty right now, know exactly where interest rates are going to end up. So do you want to pay a little bit more for a house and have a better interest rate, or see where things go? Maybe interest rates go up, but the market cools down. All depends on what people's ultimate goal is. But like you said, since we still are having historically low interest rates right now, still a good time to buy if you can find the house that you're looking for.
Right. I think 2 points to make to that. Again, you're right. We're still low. Do we think they're going to go back to up to 18%? Probably not. Do we think they're going to hit back down to 2.5%? Unless we have some sort of huge economic crisis again, then we may not see that for a while.
Yeah.
So it would be logical to think that maybe they stay around the 4%, or we're just going to see a slow increase, right?
Yep.
You made another point about, so for some people that $50 difference in a monthly payment is probably minimal, but for others that may push them out of qualifying.
Sure.
So I think the change in rates can either be good or bad depending on your situation. If we have less buyers in the market, then maybe it's going to make it less competitive for the real estate market in general.
Yep.
So those people that can swing the extra interest rate probably want to take advantage of it before it goes up again.
Sure.
So obviously the Federal Reserve doesn't set rates, but they can influence them.
Mm-hmm.
A lot of times mortgage rates are based off the 10-year US Treasury.
Okay.
I mentioned that this is sort of a risk-free investment for investors.
Mm-hmm.
They basically pack mortgages into securities and then sell them off as bonds to investors. So the return that investors are going to demand to buy these bonds dictates the general level of mortgage rates. So a lot of this is kind of coming from the top down. And again, it depends on what's happening in the economy.
Okay.
And how those events kind of impact investor confidence. And that's sort of where we get our pricing. So a lot of times bad economic news is often good for mortgage rates.
Mm-hmm.
We obviously have a lot of inflation going on, and I think that sort of started in the beginning of this year. So in January, I think a lot of conversations about inflation at the federal level and combating that sort of drove up rates.
Okay. Now, something else that can affect rates is people's credit scores as well, right?
Right. Yep. And then when we speak about kind of the ranges of where they've been, we're kind of talking in general for a primary purchase with somebody with good credit. So obviously rates are going to fall outside of that if you're purchasing as an investment property or a second home, or you don't have credit that's excellent. Loan type impacts rates a little bit. We talked about that in one of our previous episodes.
Yep.
So even for buyers that are seeing advertisements for rates in the news, it's going to be totally dependent on your situation.
Sure. Which is why people need to talk to myself, talk to you, and really figure out where they're going to be at, because just because a bank or lender is saying rates as low as there's a bunch of different factors that need to be looked into to figure out what you are actually at.
Exactly. And I think it's important to see what makes sense for a given situation. You and I were talking before we started recording just about all of these people who took advantage of refinancing this year.
Yep.
And when we talk rates, kind of generally, a standard loan type is, a 30-year conventional loan at a fixed rate. A a lot of people who refinanced this year took advantage of a much lower rate because they were able to take on the larger principal and interest payment for a shorter term. So looking at a 15-year mortgage. And that's always an option as well, even if you're not refinancing, you're just purchasing. Yeah. That's something, again, to talk to your loan officer about to see if that makes sense to try to drive in a lower rate.
Sure. Yeah. And like you said, we were talking about that because my wife and I refinanced, and we went from a 30-year to a 15-year. And I think we were around 4%, and by lowering it to a 15-year loan. And there was under $200,000 on our mortgage. So it raised our monthly payment by around $300, but we're also cutting, I think we figured about 14 years off of our our mortgage.
Yeah.
So, that trade-off, in our mind at least, was well worth it to pay that little bit extra a month, but knowing that we're going to be paying off our house a lot sooner.
Exactly. I think if you're in a financial situation to swing that extra payment now, and you plan to stay in a house for X amount of years, and I can help you figure that out, but it probably is going to be worth it to you to save on interest big time. One of the other things that you and I talked about before we started was when people get into a mortgage, they never have prepayment penalties. Mm-hmm. So, if you're able to make an extra mortgage payment, even just one a year, you're essentially lowering the total interest you'll pay over time and essentially lowering your realized interest rate over the life of the loan. So that's always an option for people to consider as well. Even if you're not going to lock yourself into that 15-year term to get that lower rate, you can kind of control it yourself based on just making extra payments.
Sure. Yeah. So all great stuff. Lindsey is awesome with that. So if anybody has questions about this stuff, reach out to myself, reach out to Lindsey. All her information will be at the end of the video. And Lindsey, thanks again for stopping by, and we'll hopefully see you again soon.
No problem. Thanks, Brian.
Thanks again to Lindsey for dropping by and talking a little about interest rates. Now that spring is in the air, the market is going to pick up, and your new home could be listed soon. But you've got to reach out to me to find that perfect area that maybe you're thinking about living or want to go see. In order to do that, give me a call, shoot me a text, send me an email, or even send me the pigeon carrier. However you want to get a hold of me, I've got your back when moving to Rochester. And until the next video, I'll catch you later.